Hi, everybody. Welcome back to Ox Talks. It is Tuesday, December 26, 2023. Hope you're having a good, productive day today. Let's get right into it. I appreciate all of you being here, watching these videos, subscribing to the channel, sharing the videos with family and friends and coworkers. I really want to, with your help and each and every one of you, keep building this community and keep sharing the word here about these events, these things that are unfolding in our economy, things that I believe are extremely important for all of us to be aware of. So please subscribe, like, and share. Very much appreciated. Couple of things that I'm working on today at the office, structuring a stock purchase agreement for a client of mine who is buying an existing business. They've been working in the business for some period of time, so they understand the inner workings. But it's a $3 million transaction. It's not small. It's not a small change. It's going to be a buy-in over a period of time, but they're signing promissory notes and stock pledge agreements, and it's about a $50,000 a month obligation. So these are the kind of things that you got to be very careful when you tread into. Even if you believe you understand the business and all the finances behind the business of what's going on, there are pitfalls. There could be unpaid tax liabilities. There could be unknown debts or liabilities out there that either the corporation has or one of the other shareholders has. It's impacting the business that may or may not get disclosed, either intentionally or unintentionally, during the due diligence process. So if you're buying a business, existing business, please see a good business lawyer to help structure the transaction, to help review everything, do the due diligence with you and on your behalf, and make sure that these things get structured for your protection. The last thing you want to do is buy into a business and then all of a sudden find yourself, when you're buying the stock of a business as opposed to the assets, you're buying the business lock, stock, and barrel with all its faults. And so if a claim comes down, guess what? That now becomes your headache to deal with. And look, they can be substantial claims out there. So do due diligence, get a good lawyer involved. I'm having a lot of this stuff come up right now where there's stock transfers and stock purchase agreements going on, which is nice. Nice to see business activity because it's great. And these are, although this is a $3 million transaction, this is still a mom and pop local business. They've done real well. I see this all the time when I weigh into these kind of deals on a regular basis. So this stuff gets me excited because it's productive. Litigation, although I do a lot of litigation, from my perspective, it's not productive. It is necessary sometimes to have the courts weigh in, but it's perilous, it's expensive, it's stressful, and the system is just not equipped to handle as much litigation as is thrown at it. So keep that in mind. The goal is to keep yourself out of the courtroom if possible. Shift gears to a couple of news articles I saw today. First was about the banks and the job losses across the board for banks this year, and then minimum wage hike that a lot of the states are getting. Is it going to help you out or not? First is from the Financial Times today. It says banks shed 60,000 jobs in one of the worst years for cuts since the financial crisis. It says the trend is set to continue over the coming year amid subdued deal making and listing activity. Says global banks eliminated more than 60,000 jobs in 2023, marking one of the heaviest years for cuts since the financial crisis, and reversing much of their hiring as they emerged from the pandemic. It says investment banks suffered a second consecutive year of plummeting fees as deal-making and public listings dried up, leaving Wall Street trying to protect profit margins by reducing headcount. That's what happens, guys. If you work for a corporation, we discuss this all the time. Reducing headcount means firing, means tightening their belt straps as a corporation to ensure shareholder value, to protect return for their shareholders. That's all that corporations care about. If you are one of these people that relies on a paycheck from a company, doesn't matter what level you are, if you're entry level secretary or a C-suite executive, you are always potentially at risk of getting a termination notice and then guess what? Being on your own. So please consider trying to find a path towards owning your own business, whether it's starting something new, buying into an existing business as a track record and a revenue stream. I believe these things are so important. This article continues. The takeover of Credit Suisse by UBS earlier this year already resulted in 13,000 fewer roles as the combined bank, with further big redundancy rounds expected in the year ahead. So more layoffs coming there. It says, quote, and this is key, there is no stability, there is no investment, there is no growth in most banks, and there are likely to be more job cuts, says Lee Thatcher, owner of financial services headhunting firm Silvermine Partners, adding, there are some very nice gifts being sent to bosses at the moment, meaning people sucking up because they're concerned about whether they're going to be able to keep their jobs next year. 20 of the world's biggest banks cut at least 61,905 jobs in 2023, according to Financial Times calculations. That compares with more than 140,000 jobs slashed by the same lenders during the global financial crisis of 07-08. We're not as great there, but second to that. It is substantial. Some of the banks that cut: UBS, Credit Suisse, was top. Then Wells Fargo, Citigroup, Morgan Stanley, Bank of America, Merrill Lynch, Goldman Sachs, Toronto Dominion Bank, and Bank of Nova Scotia. Fairly substantial headcount reductions. So at least half of 2023's reductions came from Wall Street lenders whose investment banking businesses have struggled to cope with the speed of interest rate rises in the United States and in Europe. So we know about UBS, then we know Wells Fargo. They cut 12,000, reducing their headcount to 230,000 people. And of course, they set aside, we did a show on this a few weeks ago, they set aside, Wells Fargo, $1 billion for severance packages and severance costs, which suggests, and I think they even indicated, there were tens of thousands more jobs which were going to be cut in the coming year. Citigroup cut 5,000 jobs. Morgan Stanley shed 4,800 jobs. Bank of America cut 4,000 jobs. Goldman Sachs, 3,200 jobs. JP Morgan, 1,000. So substantial cuts by the banks. What do they see? What do they know that we don't? Probably, we discussed this a lot, probably everything. Barring a swing back in investment banking activity, the outlook for global banking jobs is unlikely to improve in the coming year. We expect full year 2024 to be a continuation of the story of 2023, said Coalition's Aurora. We see banks getting more conservative again, meaning they are going to be cutting more positions. So I thought that was important to hear. Let's talk about minimum wage. This came out of NPR today. Minimum wage workers in 22 states will be getting raises on January 1st. Minimum wage workers in 22 states will see more money in their paychecks. Those increases will affect an estimated 9.9 million workers, according to the Economic Policy Institute, the EPI, which estimates that those bumped wages will add up to an additional 6.95 billion in pay. In addition to the 22 states, 38 cities and counties will also increase their minimum wages above state minimums on January 1st. 20 states will maintain the federal minimum wage of $7.25 an hour. How do people survive on $7.25 an hour? That's gross pay, I believe. So after they take taxes out of that, how do you put food on the table? How do you make car payments? How do you pay for insurance costs? So according to EPI, of the 17.6 million workers earning less than $15 an hour, nearly half live in those 20 states that continue to stick with the federal minimum wage, which has not changed since 2009. Of course, the cost of living has skyrocketed. We all know that. According to the Bureau of Labor Statistics, Consumer Price Index, a dollar in 2023 can buy roughly 70% of what it could buy in 2009. So the dollar is going down in value. Wages are not keeping up with the pace of inflation. I know we talk about that a lot on this channel, but it's something that we are obviously mindful of, especially of those of us, those that are working for those wages and struggling and trying to make ends meet. Those who earn a minimum wage have had a harder time paying rent and buying essential household goods, including groceries. We know that. Quickly, let's address some of the states and the minimum wage increase. Alaska, it's $10.85 now an hour, going to $11.73 an hour. Arizona, $13.85, going to $14.35. California is $15.50 an hour right now, going to $16. Colorado, $13.65, going to $14.42. Connecticut, $15, going to $15.69. Delaware, $11.75, going to $13.25. Hawaii is $12 right now an hour, going to $14. Illinois, $13 an hour right now, going to $14. Maine, $13.80 an hour, going to $14.15. It goes on and on. We have increases in Maryland, Michigan, Minnesota, Missouri, Montana, Nebraska, New Jersey, New York. Let me finish this list. Rhode Island, South Dakota, Vermont, and Washington. So obviously, we do have some states increasing the minimum wage. Let me just briefly scan this article and see which ones look like they have the largest increase. Colorado, 77 cents an hour increase. Hawaii is $1.75 an hour increase. California is 50 cents. Let me back up. California's 50 cents. Arizona's 50 cents. Colorado, 77 cents, like I said. Hawaii is $2 an hour on the increase. Okay, so that's substantial. Looks like Nebraska's $1.50 an hour increase. Those are a couple of the big ones. Rhode Island's going up $1 an hour also. But again, folks, these are relatively small numbers. You times that by, let's say 8 hours a day, whether or not you're getting overtime, you reduce the taxes, you factor in the cost of goods skyrocketing, and it's not good news for minimum wage earners. So for you minimum wage earners out there, you are just as able to think about a side hustle as anybody else. Start to deploy other skills you have to increase revenue streams from other sources. Don't be negative about that. That's not the right word I'm looking for. Don't be dissuaded or discouraged from looking at some other sources of income, because I don't know how the gap is being bridged right now. Maybe these are some of the credit card debts that we're seeing piling up because people are using lines of credit and credit cards to pay for everyday necessities. And I feel for those that are having to do that, but we've got to try to reverse course on that going into 2024. With that being said, I hope those couple of topics today were helpful for you. I'm going to be leaving here in about an hour to go grab my workout. Please do the same. Let's start 2024. No reason to wait till January 1st. Let's start now. Get out, get some steps in today. Drop down, do some push-ups, some sit-ups. Start drinking more water. Make some changes. You don't have to sit around and be a slob until New Year's. I'm not accusing anybody of that. I'm just saying we all need to stay motivated. Let's jump up and do it now. Again, no reason to wait for New Year's resolutions. So I hope all of you have a great day today, and I will see you tomorrow. Okay, bye.